let's look at the investor program, which Fannie and Freddie has recently increased some adjustments to those programs for second homes and investment properties. The attractiveness of those properties for Fannie Mae and for Freddie Mac are less attractive. So they're making it so that obtaining financing is more costly. Mm-hmm. With that being said, they still require W-2s, pay stubs, bank statements, tax returns, and rightly so, in order to qualify to fit into that bucket or pool of loans. On the non-bank side, there are lenders out in the marketplace, and very good lenders, I may say, out in the marketplace that can do non-QM, non-qualified mortgages that are not attached to Fannie Mae and Freddie Mac, and that can offer loan programs that require a little more down payment, as I said earlier, moments ago, but with less documentation. So they still have a commitment and skin in the game, so to speak, but they hold those loans in their portfolio. That means they don't sell those loans. That means you'll always be making your payments to them unless they do something down the road with that loan. I don't know if I can be any more specific.
Good. I think it's really important that people understand the difference between government-backed versus the thing. And even portfolio is a term that a lot of times people don't understand what that means. And one of the biggest things I would say is that you just said that you're always going to get to pay that payment to that company. And so often when someone has a mortgage, their mortgage may be sold 2 or 3 times, and it keeps changing who you pay. It can be very confusing, and it can also cause missed payments and all sorts of confusions. So it is really nice when you know that it's going to stay with the company that you ended up originally getting the mortgage from. So what do they need to know that to be able to make a decision on what kind of mortgage they want, or even what mortgage company they want to work with, or if they're going to consider working with their bank, and do they really understand the differences?
Sure. Sure. And Jennifer, that's the critical difference I see in today's market. And it's so critically important. It's being able to have these various loan programs that we're talking about and presenting them all to a prospective home buyer in the marketplace, instead of you or me as a lender making up my mind, oh, they should only do this product and nothing else. No, you have to give them, it's fair, it's equitable, that you give them the opportunity to understand this is a huge investment. It's a ton of money. And it is the largest emotional purchase outside of marriage I think anyone will ever make in their life. So you have to present all the options to them, and even loan figures and numbers, so that they can get a full grasp and understanding of what that picture looks like, and then they can make a good decision.